Hello everyone. I've put together a short presentation. Actually, it's a little bit more than short, but there's a lot of Bitcoin research that I've been doing over the past couple of months, and I've got a selection of graphics which I would like to display on the screen, and I'm going to talk through them. And for those of you who are interested in Bitcoin and the results of my research, this is the video for you. So let's get to the presentation. Okay, Metcalfes Law. Metcalfe's law is very important. It talks about how the value of a network increases uh, as more participants come onto the network. So, as an example, with the telephone network, the value of one telephone is not so great. But once you add a second telephone and then three or four more telephones, and you start to grow exponentially, the value of that network increases n squared. So I want you to think about Metcalfe's law and remember how over time the value of a network increases. So there's going to be some graphics further in the presentation that go into some detail about how Facebook and Bitcoin and other companies, large startups, etc., grew over time. So distributed, centralized, and decentralized. We're used to a centralized world. If you think about the world that we live in, it's full of centralized providers. We have corporations, we have banks, we have financial services organizations, we have government, we have small companies, large companies, mid-sized companies. We have servers on the internet, which is, if you think about the servers on the internet, everything is most things are about a client-server relationship. So you've got a server on the internet that runs a web server. It's centralized. It's got a whole lot of data, videos, etc. on it, and that serves a whole lot of users who are located all around the world. We're moving, though, in the future towards a more decentralized model. Centralized organizations, servers, whenever we're talking about anything that's centralized, they become honeypots. And honeypots are something that where we're storing a whole lot of data in a centralized location, it becomes vulnerable to hackers, people who want to steal that data. If you think about the world that we live in terms of the big banks and financial institutions, they've got a whole lot of power in the economy in terms of in comparison to the average person. So we're moving towards a decentralized world, and Bitcoin in particular is an example of decentralized technology, decentralized money. Instead of having a central provider, a bank that has a copy of one copy of the ledger, we've got many people all around the world who have got a copy of the ledger. So there are a number of people all around the world who can keep track of spending on the Bitcoin network. We don't need one centralized provider to do that. And the reason why is because Bitcoin is a practical example of the Byzantine generals problem, a practical solution to that. So before that problem was solved in computer science, we couldn't have decentralized digital currencies. Okay, so this graphic here is from Dan Moorhead of Pantera Capital. So in his investor letters, he provides a whole lot of information to the general public about Bitcoin. He's an institutional investor, and what we have here is the price of Bitcoin over time and the projected price of it in the future. So in terms of his past letters, what that's saying is that at the current price of Bitcoin, and Bitcoin's gone up more, it's actually higher than 22,750 at the moment. What it's saying is that it's 9 weeks behind the projected price that Dan Moorhead and his team projected for Bitcoin. So you can see there by the 1st of the 8th, 2021, they're projecting a Bitcoin price of 115,212 US dollars. So as you can see, even though that we're currently at 35 or around 35,000 Australian dollars per Bitcoin, you can see that there's quite some way to grow. Now, this is an institutional investor who's making this projection, and these guys own a lot of Bitcoin. Okay, so there's a lot of people out there who don't understand crypto. They call it a bubble, like Peter Schiff. It's not real money. It's too volatile. It's a fraud. Now, the guy there that's saying it's a fraud, that's Jamie Dimon. And if anyone's a fraud, it's him and his his corporation. So, Tulip Mania, of course, in the past there's been bubbles in all sorts of asset classes. And there's an interesting book on that subject by Charles Mackay, Extraordinary Popular Delusions and the Madness of Crowds. If you haven't read that book, I highly recommend reading that book. So this isn't another Tulip Mania. We're talking about a monetary asset here. We're not talking about flowers. We're not talking about something that is destructible or that dies after a short period of time. Warren Buffett obviously is one of the most successful investors in the world. He doesn't like Bitcoin. He doesn't trust Bitcoin. Warren Buffett should be respected as an investor. He's made a whole lot of money over a long period of time. However, he's also getting up there in terms of his age, and he's never been a big proponent of new technology. It's not his investment style. So there's no surprises there that Warren Buffett doesn't like Bitcoin. You can't trust the exchanges. Now, to a degree, that was true, especially in the past, but technology has been improving and the exchanges have gotten better. So there's a lot of fear out there, a lot of uncertainty, a lot of doubt, especially in the media. You're going to hear all sorts of stuff. There's a lot of negativity out there, but you've got to look through all that negativity and look at the asset class for what it is, and read the Bitcoin white paper, think about it in depth, and look at the numbers. Again, this is a graphic from Dan Moorhead, Pantera Capital. What we've got here is the stock to flow price projection of Bitcoin. You can see up there $115,212. So the stock to flow price projection, there is an analyst by the name of Plan B. You can look him up on Twitter, and he came out with this stock to flow ratio, which is mostly used in the precious metals circles, so gold, silver, but it can be applied to other asset classes as well. And basically what it says is, if you think about gold, there is a certain amount of stock that is out there, existing stores of gold that sits in in central banks and individuals who buy gold and they store gold. So there's an amount of gold that's out there, and then there's the flow of gold, which is how much gold is being dug up out of the ground per year. And that's how they come up with the stock to flow ratio. So Bitcoin at the moment is pretty much on par with gold in terms of its stock to flow. But every 4 years, as the supply of Bitcoin is halved, that goes to the miners for mining the block reward, the stock to flow ratio of Bitcoin also halves. So after the next halving in 3.5 years' time, Bitcoin will be the scarcest asset on earth. So you can see there the price projection based on that stock to flow ratio model that Plan B developed. So look up Plan B. He's on Twitter. There's a lot of stuff out there that he's talked about. Okay, value capture in the blockchain space is very different to the value capture of the old internet. So the existing internet that we're used to, the money was captured at the application layer, not at the protocol layer. Now, the internet of value, or the blockchain internet, all the value is being captured in the protocols itself. So in Bitcoin, in Ethereum, in all these cryptocurrencies, you see the prices increasing, but particularly with Bitcoin, all that value is being accrued in Bitcoin itself as an asset. So we're used to the internet where Facebook, LinkedIn, YouTube, Google, all the big platforms have made all the money. Well, in the blockchain internet, that's different. The money's accruing to the tokens themselves, and that's where you want to be, buying the tokens, especially Bitcoin. Again, this is the stock to flow ratio from Plan B. You can see where silver is, where Bitcoin was in 2015, where Bitcoin is today in 2020, where gold is. So you can see it's getting up to it towards gold, and in 2025 it will eclipse gold, and then by 2035, we're talking a completely uncharted territory for any asset class anywhere in the world. Bitcoin will be the scarcest asset out there. This is an interesting graphic. As we all know, there's an unlimited supply of paper currency out there. The central banks and governments of the world, they can print up as much currency as they like. We, the people, have to work for that currency. And what do? We take it and we convert it to scarce assets. So in particular, real estate, stocks as well, but most people own their own home or aspire to own their own home. Is a scarce asset, and they're doing that so that they can accrue value, store value. They're using the home as a store of value. We see all around the world where real estate prices have become unhinged from economic reality, and the prices are way beyond their intrinsic value in many countries. But what other options do people have when it comes to storing value? All right. You can see on the right-hand side here that with this blockchain technology in the world that we're starting to come into, it's where the assets themselves chase Bitcoin. So what that's saying is that money that exists at the moment, or value that exists at the moment in other asset classes, stocks, real estate, land, precious metals, etc., is being taken away from those assets as people sell them or borrow against them and put the money into Bitcoin to capture the price increase of Bitcoin over time. This is my spreadsheet. I recommend everyone who's watching this video, if you're interested in Bitcoin and want to develop a world-class knowledge of Bitcoin and the blockchain space, have a look at this spreadsheet. It's on the front page of my website at intjbilling.com. Download it, have a look through it. All the links are in there. Click on the links, you'll go to some of the best Bitcoin speakers in the world. They're all listed in that spreadsheet along with my review of each of the speakers. So I highly recommend those of you who want to develop your knowledge in the space to check out the spreadsheet and go through the YouTube channels, Twitter accounts, and the corporate websites of all the people in that spreadsheet. Netscape Navigator, 1994. You see here, Bitcoin. The question is, when is Bitcoin going to have its Netscape moment? What is a Netscape moment? Well, think back during the 90s. There was a time before Netscape came along. There was a lot of speculation about the internet and what was going to happen with it and where it's going. It wasn't until Netscape came along and offered an easy-to-use interface, a graphical interface to the general public, that everybody suddenly realized, oh my God, this is it. This is going to change the world. Now, has Bitcoin had that moment yet? Not sure. Something's going to come along at some point within the Bitcoin space, and we'll all look at it and we'll say, oh my God, this is it. This is the Netscape moment, where it just becomes obvious to everyone that that Bitcoin is the next big thing, and it's easy to use. It'll be easy to use for everybody. And we're still waiting for that moment. Now, some of you who are more cynical might be saying to yourselves, but Clark, Netscape failed. Look what happened to Netscape over time. Remember, we are talking about protocols. When I talk about the cryptocurrencies, we're talking about an internet protocol. And the history of internet protocols is different to the history of internet software technologies in terms of software that sits atop of the protocol. So the protocols are the underlying layers of the internet, like the plumbing of the internet, so to speak. So, we're used to the application layers. One thing comes along like MySpace, and then something else comes along like Facebook and kills MySpace. But the history of internet protocols, if you look up that history, you'll see that first mover advantage is extremely important. It's the most important factor in the success of an internet protocol. And Bitcoin's lead it's just too far ahead. And that's what the market is saying as well in terms of the valuation of Bitcoin. Okay, Bitcoin versus gold versus the dollar in terms of the traits of money. You can see here that Bitcoin is rated high on all the most important traits of money. It's fungible, non-consumable, portable, durable, highly divisible, secure, it can't be counterfeited, it's easily transactable, it's scarce with a predictable supply, decentralized, and it's smart, i.e. programmable. And when you have a look and see the US dollar, you can see there that it falls down on a number of important factors. In particular, the most important factor, which is scarcity. Another factor it falls down on is it's not decentralized. And that's not a good thing. You know, we've got politicians and bankers and all these people, we've got all this extraordinary power over the average citizen. And with the blockchain space and where the world's moving to, it's going to be literally, it will be a lot more power to the people. And that's what Bitcoin represents. Bitcoin is the people's money. So nobody's got control of it. There's no one central person who's got control of it. There's no Bitcoin CEO, board of directors, any of that sort of stuff, right? You can see there gold. Gold falls down on a number of things. It's not easily transactable. It's not sovereign. It's not decentralized. It's not smart. You can't program it. So Bitcoin is a better money than gold and a better money than the US dollar, and certainly better money than any fiat currency. And over time, money is a winner-take-all technology. Over time, the value accrues to the best money, and people scramble to own the best money, the rarest money, the scarcest money. They want to sell the crappy money, which is the paper currency, to buy or to hold the good money, which is Bitcoin. There's actually a classic scene in the movie Gone with the Wind where the brothel madam rolls up in her horse-drawn carriage, and she gives a donation. And the donation is not in paper currency, but it's in gold. And the reaction on the lady's face as she receives this donation in gold says it all. That, yep, gold is the good money. So that was back then, but the world that we're moving towards is Bitcoin being a better store of value over time than gold. Again, stock to flow ratio comparison and where we're going with Bitcoin. So it's really important, this stock to flow ratio, because we're heading into uncharted territories with Bitcoin. Okay, the halving. You can see there back in 2009, the amount of Bitcoin rewarded to the Bitcoin miners, they're the people on the computers on the Bitcoin network that verify all the transactions. Each block that was added to the blockchain, so every 10 minutes a block is added to the blockchain and 50 Bitcoins are rewarded. And over time you can see every 4 years it's been halved, 50 to 25 to 12.5 to 6.25, and this halving is going to go on all the way up to the year 2140. So you can see even now in 2020, 6.25 Bitcoins being the block, 6.25 Bitcoins being the block reward for the miners. In another 4 years' time, it's going to be just over 3 Bitcoins. And again, in 4 years after that, it'll be 1.5, and so it goes. So you can see the scarcity of Bitcoin. Over time, it becomes even more scarce. Now, it's scarce enough as it is now, but in the future, it's going to become incredibly scarce. We're not going to be talking about owning whole Bitcoins. It'll be milli Bitcoins, and it'll probably be quoted in milli Bitcoins as well. Okay, this is a graphic from ARK Invest. ARK Invest is one of the smartest group of people that I've seen out there. The company is managed by a woman by the name of Catherine Wood, and they are just fantastic. They put together this Bitcoin research report about Bitcoin as an investment opportunity. And as you can see there, when the report was created, the market cap of Bitcoin was 220 billion. The market cap is now around $500 billion, so it's more than doubled since they put out their research report. But they were projecting a 14 times increase in the market cap of Bitcoin, and they're projecting it to be a $3 trillion market cap by 2025. So we're at half a trillion at the moment. So now we're looking at a 6 times opportunity, a 6 times price increase. So the current price of Bitcoin is about $36,000, something like that. So we're looking at about $190 odd thousand per Bitcoin by 2025 in Australian dollars. So you can see there's still a significant opportunity. It's not 14 times anymore because the market cap has doubled within, actually it's gone up more than 400% in the last year in 2020. But we're still looking at least a 6 times price, market cap increase opportunity over that time period. And ARK Invest, I think, are being conservative in this report. I think it'll be a higher market cap than $3 trillion. So here you can see the Bitcoin returns, percentage returns per year. You can see in 2017 it was a 1,368% return. We had a big down year in 2018. 2019, 92%, and 2020, 121%. That was so far. That's when I found this graphic. But the 2020 return has been about 400% over the course of the entire year. So it's a big return. Okay, so what this graphic is saying is that in 2015, between 2015 and 2016, it took 1,407 Bitcoins to buy a $300,000 house in the United States. And over time, that's been reduced to 36 Bitcoins. Now, again, this graphic is a bit out of date as well. It's about 3 or 4 months old. So that 36 Bitcoin, it'll be even less than that now to buy the $300,000 house. So we're looking at a Bitcoin price of about $26,000 US. So that's actually a little over 10, it's about 10 or 11 Bitcoins. 11 Bitcoins now to buy the house. So you can see that the price of the house has depreciated rapidly against the price of Bitcoin because Bitcoin has increased so rapidly in value. So people who are watching the price of Bitcoin, they can see what's going on here, that it's the fastest appreciating asset in history, and it's appreciating much higher and faster than other assets out there. I mean, with real estate, you'd be lucky to get about 8% per year in terms of a capital growth. Obviously, you get rental income as well, but in terms of the capital growth, it's about 8% per year. And over the long term, you're mostly getting a return just slightly above inflation with real estate. You can get very lucky with real estate. My family got lucky. There's other people who got lucky as well. Yeah, obviously you're tying up money in one asset, in one suburb, in one location, one country, etc. And it's an illiquid asset in comparison to Bitcoin. So over time, the number of hodlers goes up. What is a hodler? It's a person who owns and holds Bitcoin for the long term. This graphic here talks about the distribution of Bitcoin. So Bitcoin is one of the assets, and there was articles about this that said that you don't actually need a whole lot of Bitcoin to be in the top percent of the entire world. Now, if you think about it, there's only ever going to be 21 million Bitcoins. There is a lot more millionaires in the world than what there are the number of Bitcoins. So if every millionaire in the world wanted to own one Bitcoin, they couldn't because there's not enough supply. So Bitcoin's one of those great asymmetric investment opportunities that's available to anybody in the world. Wherever they are, anybody can take advantage of the opportunity to buy up Bitcoin and be in the top percentage of the world in terms of Bitcoin ownership. Now, there's people out there who own a small percentage of Bitcoin, and there's other people who own a number of Bitcoins. But you can see there with a balance of between 1 to 10 Bitcoin, there is 655,744 Bitcoin addresses who own that amount of Bitcoin. As a percentage, it's about 2.05%. Now, there was an article published that you need 0.21 bitcoins to be in the top percentage of the world of Bitcoin ownership. Now, at the moment, Bitcoin, the price of Bitcoin is soared so high that um, it's out of reach for most people around the world. So the opportunity to have got into the top percentage of Bitcoin owners came and it went. Now, I was talking a lot about this in the past, telling people that the opportunity was between 2018 and 2019 and parts of 2020. And I was accumulating Bitcoin heavily during those years, knowing full well what was about to start happening with the block reward halving and with the scarcity and everything else. So that's why a lot of people out there are hodling or just holding on for dear life, buying as much Bitcoin as they can and holding it. So there's me back in April of 2017 when I first started buying up Bitcoin. You can see there that this is a graphic of the holdings in publicly traded companies, and you can see that the publicly trading companies have started buying up Bitcoin, and looks like I might have trouble with the stream. Might just end this stream and start a second stream because it looks like Facebook's having problems playing it for some reason. I'll continue this video shortly.